Hey traders, Akil Stokes here. Welcome back to the Weekend Trading Edge video. My original plan was to take this weekend off as I've been on the road since Friday, but our President Donald Trump, on what looked like to be kind of a mild, mellow Friday, launched a big hand grenade into the markets and upset everything. So I am here to show you what we can look forward to in the aftermath of that. I also apologize because I may have jinxed it. I just put out a Trading Coach podcast episode on Thursday asking if the next big black swan event was coming, and then this comes, and although I wouldn't consider this a big black swan event like the 1,000 pipper that we saw 10 years ago, this is one of those mellow ones where it's unexpected yet kind of also prepared for, seeing how we've become accustomed to the Trump tweet era where he says stuff randomly and random things happen and then the market goes berserk. If you want more details on what happened, I'll leave some links in the description box below. You should be seeing some stuff on your screen as well that hopefully you've been reading. I want to hop into the charts because I am tired and I have to wake up early tomorrow morning once again. So we're going to start here on the euro dollar, and we're going to look at how the euro dollar ended the week. So we had this big candle right here, which is the big move we saw in the market, and we ended with a few interesting setups. And I have both a bullish and a bearish setup on the radar here for the euro dollar. So one, as we go through our boring 4-step process, if you're new to the channel, it's a way that we do analysis so we can be consistent and consistently extract our edge from the market and be profitable over time, right? That 4-step process is called IPDE, which stands for identify, predict, decide, execute. And the first thing I want to look at with the euro dollar is ask myself, where has price come to? And if I go back to my basics of understanding how to read a price chart, I'll link a video for that below as well for you guys who are new to the channel. It's like an hour-long lesson or so, if my brain can find the right video. We start off by measuring the ebbs and the flows. We have a swing high to swing low right here. This is a horrible color for a line. There we go. And then we have a swing low to swing high. Then another one down here. And although this may seem like a completely dumb and monotonous exercise, what you're actually doing is you're training your eyes, your reticular activating system to understand and recognize the ebbs and flows in the market, which is going to be the same tool that we use to identify key levels of structure. Because in general, these levels right here, if I can find box, which is hidden, there we go. This is going to be the level in which we would expect price to come to if we were to retrace like we just did. So I can draw it starting at the low of this most recent, or the previous, I guess, new structure low, and drag it to the top of this level right here, which is called our outside return. And this is our magical box. If you want to take things one step forward, for you guys that are familiar with the elephant candle, right? You can see we have a big elephant candle right here. And if we isolate the consolidative period before that, this doji right there, we can even have a more specific zone in which we shoot for. Whichever way you look at it, price is in that zone. And we've come into this into that zone, and we've done some interesting things. I'll keep it on here, I guess. I'll just zoom in a little bit. We've done some interesting things here. One, you can see that on this candle here, we initially rallied up into that zone, right? Big old market reaction, dollar weakness. And we passed it at one point. I will erase these so you guys can see it, at least the big one right here. But you can see that we found selling pressure as we got to the highs here, and the market was able to beat it back down. We then followed that up again with a secondary candle, and what we did was we stayed within the range of the previous candle. If you're a frequent follower of the video here, you know this is called an inside bar, right? When we have a candle that completes, completely within the range of the previous bar. And pretty much that's a sign of consolidation slash contraction. And more importantly with this one, we complete in the upper range of the bar. So it's more of a tight looking consolidative period. Now, if we were to continue to see some bullish action here on the euro dollar, what I would wait for is this, right? Going back to this little ebby and flowy thing we drew on. If we saw, let's say, another push up maybe retesting a higher level because overlapping levels of structure also or often do get tested. And then we retraced a little bit like that. This would actually give us what's called a head and shoulders pattern, which is a classic reversal pattern. And this would be a good opportunity for those of you who are looking to get bullish. So that's the bullish opportunity right there. The other side of the story would be this. Let's say this is simply a market reaction. Now, I think Monday is going to be interesting because it's a US holiday. So my guess is we'll probably see some more sideways consolidation. But if this is a Friday grenade has been launched in the market while I wasn't looking, overreaction panic type of move, and the market simply corrects itself, then we should see a move back down to where we started. And this would be a case where you would trade an inside, or you could trade an inside bar break to the downside. And what I mean by that is you put a sell stop order, if you were super aggressive, right below the range of this green bar. And if price action breaks down this way, you are filled to the downside. This also comes after, for you guys that are pattern traders who are saying, Akil, what about the back pattern that was here? Well, I'm not talking about it because it has completed, but we'll put it on there. And congrats to all you guys that made money off of that. X to A to B, B to C, C to D. Not quite that high, but eventually went that high, and we nibbled at the target right there, just hit it perfectly. So the importance of front running proves itself once again. If you guys are asking yourself what's an alternative way perhaps to get short here on the hourly, well, we do have two things happening here. One, we do have a double top, and that double top does come at a previous level of structure. You can also look for a 2618 opportunity, meaning wait for price to break underneath this range. So wait for that inside bar to break. Wait for the retest into this zone, and then look to get short on that retest. So lots of ways to potentially trade the euro dollar. Hopefully it gives you some ideas depending on your trading style. Now let's move on to the next pair. The next pair is going to be the euro yen. Euro yen has kind of been a runaway train until it ran right into a previous level of structure, and now it's reversed and is running away in the opposite direction. And you can see we ended the week with two bearish days on the euro yen, the last of which being an extremely strong bearish day. And the question is, where are we likely to come to next? And this is an interesting one because your chart looks a little funky. No, you don't need to refresh. There is a missing space there that is called a gap. And I get a lot of questions about gaps. A lot of traders are afraid of gaps. Again, more information that I hope I will link in the description box below, but there are some Trading Coach Podcast episodes about gaps. Just search Trading Coach Podcast gaps, and it dispels and debunks some of those myths, so you don't have to be scared if you are someone that is new. But gaps will also or often play the role of support and resistance. And if we're looking for where this bearish move is going to terminate as I go down to the 4-hour chart, well, we have a nice structure swap zone right here. This is also called an ice zone, where we have previous structure resistance right there. We retraced off of that. We came up, we gapped ahead. You can see price put in a little bit of a battle. I'll draw a little box over here, right after we gapped, trying to push down, and then got rejected by the invisible level of structure that's there. We jumped off of that level of structure, but said, hey, you know what? I'm going to retest this again. Held again at that level before going higher. So if we were to return to this level again, I know it's scary because there's all this open space right here and you don't know what to do with it, which is hence why I'm here telling you how you can look at it and not be as scared. I do think this is a level that you should look for a potential bullish reversal. Now, when I say bullish reversal, I don't mean a long-term bullish reversal. What I mean is for the market to take a breath. So for the market to come down to this level, right, we will probably see some buying pressure up here, not just from the previous level of structure, but also from the sellers taking some profits. And we'll see a little bit of a bump. Now, do we expect this bump to continue higher? Not really. I won't take you that far back, but if you look back on the weekly, we are at a previous level of structure. So I'm not really interested in a continuation long. So just a little bit of a retracement, maybe back up to 176s or so. And then this is another one that could also turn into a potential head and shoulders. And if we do end up violating that neckline, which would be a little bit lowered in here, just like with the euro dollar, we can, if you're aggressive, just sell it on the violation of that neckline, or wait for that retest back up, look for that reason for entry, and then look to sell it down by there. I love this trade, right? I just said that because it looks kind of like a heart, I guess, or a bow, right? There we go. Euro yen trading opportunity wrapped in a tight little bow for you. So for time purposes, to save my sanity and my sleep, I skipped over to pound yen, but pretty much the pound yen has a very similar opportunity to the euro yen as well. Next, I want to head to the Aussie dollar, which has one of my favorite yet most hated patterns setting up. And that is going to be a butterfly pattern. Now you can interpret this X to A leg how you want. The one that stood out for me was this swing low right here to that swing high. So that's gonna be my starting point. I call that my X leg to my A leg. I then want to take on my Fibonacci retracement and drag it from that same swing low to swing high. And based off of what Fibonacci retracement level is hit, that's going to tell me what advanced pattern formation I should expect. Now, don't be intimidated by the word advanced pattern formation. They're actually pretty simple. As you see, all you have to do is, one, know how to read the ebbs and flows of the market. The simple, boring stuff that we tell every trader to master that many traders don't want to do because they don't see it as a direct way to make money out of the market. But when they go back, they'll see that understanding these foundational elements of stuff like reading a price chart is what will ultimately allow you to make money from the market. Can you tell I work with a lot of traders, right? One, you need to understand that. Two, you need to understand how to draw on your Fibonacci retracement and extension levels, which is pretty much just connecting the dots between the ebbs and flows that you drew. Anywho, right, this one came down to a 786, which means I should be on alert for what's called a butterfly pattern. Now, many different ways to trade the butterfly pattern. That's why it's one of the complicated ones. The way that I specifically look for it is taking my Fibonacci extension tool, dragging it from that same swing low to swing high, but doing it backwards, right? So instead of going swing low to swing high, left to right, I'm going to go swing high to swing low, right to left, and that's going to be called a Fibonacci inversion. And the specific level that I'm looking for is going to be this 127 Fibonacci level right there. And when I connect the dots on that, it gives me an X to A, it gives me an A to B, it gives me a B to C, and it gives me a C to D completion down here. Now, what I absolutely hate about the butterfly pattern is the fact that the D completion completes below the X leg, right? The X leg in Gartley's and Bats is your built-in level of structure. So you can easily be like, hey, stops above this because if this level breaks, I'm wrong, right? The thing about the butterfly pattern is that that level has already been broken in order for the butterfly pattern to complete. So you don't really have that same safety net unless you have situations like this where if you look left, you will see that there are key levels of structure that you can use as a safety net, right? This is a sneaky one right here that you have to pay attention to as well. But you can see multiple levels of structure here that will provide you comfort, I guess you can say, in your stop loss placement. So it's a decent butterfly pattern that also works as a structure trade. Again, just be aware of this level right here. As we've spoken before about over and underlapping levels of structure, typically these levels are tested as the market kind of figures out what it wants to do. So if you can get your stop loss underneath that level, I would certainly advise it. Now it's time for our weekly revisit of the Kiwi, New Zealand dollar. Seems like we've been looking at this pair for the last, month or so. And if you're familiar and a regular to the channel, you know we have been looking bearish continuation, bearish continuation, bearish continuation. And after a slightly weird week of a bigger than average interest rate cut on the Kiwi, and then a big move, and then a correction from that big move, we are back in business and we have a fresh break. So originally we were looking at a short entry up here. Obviously that is over. Erase that from your head. It is gone. Well, don't erase it completely. Keep it in your head because what we're going to look for now is the same thing. So we had initially a break and close below this previous level of structure. That's what set up our short. We were looking for a pullback back into structure to set up our short. That pullback happened, and now what do? We got what I call a fresh break, meaning a new break and close below structure. And now if price action does the exact same thing that it did before, pulls back, we can then look for another short. And we can keep doing this until we reach the ultimate target zone. So again, the ultimate target zone doesn't come till later. I'm not going to do all the analysis again because I trust that you saw it in previous videos, but we're still looking for price action to continue lower. There is still meat on the bone, unlike the chicken I just shoved down my throat for dinner. It's very hungry. Didn't eat all day. Anyway, we can go down to a lower time frame, and again, now it's just the waiting game, right? We have price action putting in a nice move here, a nice retest of structure. You can see the break and close below. There are two main levels I would look for, for a pullback, and this could be a sneaky one. The first level is going to be this one right here, right? This is the most recent structure low. This is the most recent kind of mini pullback from it. This is not technically the outside return. Technically the outside return is here, but this is the most recent kind of shorter term outside return. So the first and most aggressive level would be waiting for price action to come back to this level and then head back down. Something sneaky that may occur is that sneaky little Fibonacci inversion trade that we spoke about in the past as well. And essentially what that is, again, there are tons of videos on, look, just subscribe to the channel. I'm tired of linking all these videos. Just subscribe to the channel, watch every video, you'll learn everything I'm talking about, or just YouTube search Akil Stokes and enter the thing that you want to hear about and a video will come up. Because I'm gonna end up with 14 descriptions or links in this description box, and I don't want to do that. So just be a regular and you'll learn about it. And if you have questions, leave it in the comment section below, and then I'll make a video out of it, and then boom, you have your answer there. But a Fibonacci inversion trade is this. It is pretty much, to make it as simple as possible, when the market acts like it's reversing trend, but is not really reversing trend, and then that trend continues. And if you know how to look for it, you're in it up at this level, and you're very excited, and you're like, oh my gosh, I can't believe it, I made money, yay, I'm so happy. And if you weren't in it because you were fooled by the reversal of trend, then you're saying choice words that I won't repeat on this YouTube channel because I try to keep it as clean as possible. So what that Fibonacci inversion trade is, or how we do it, is pretty simple. We take our Fibonacci extension from the low here. Now, we do need to wait for the retracement to start because we don't know if this is going to be the ultimate low. If this thing continues to push lower, then we have a new anchor point. But as of right now, as the markets are closed on a Saturday night, this is going to be our low. We would take that Fibonacci extension tool and just like we did with the butterfly, invert it. So draw it backwards to the highs right here and then back down. And what I'm looking for is that 1618 level mainly. This is my preferred level. You can also look for the 127, which will be right here. You can also take a Fibonacci retracement tool from our big swing high to swing low and see if there is any confluence there. Again, what I personally look for, or what I personally adore back when I was a day trader, was to have this 618 lining right up with the 1618. You don't get that in this specific opportunity, but you do get a 618 retracement lining up for 127, which is pretty powerful. You also get a 786 lining up with a 1618, which is pretty powerful. And then again, you do have a nice just structure zone right here to look for. So two options here on the Kiwi. One, if price action comes into this level, look for reason for entry. If you get reason for entry, trade it short. Two, if we violate this level, don't get scared away because this may be one of those tricky Fibonacci inversion setups that offers a secondary entry up here, or a first-dary primary. There are the words I'm looking for. Just keep an eye on Kiwi. Speaking of Kiwi, let's go over to pound Kiwi. This is an interesting opportunity as well. It's going to show you some of the symmetry that happens in the market. Price action moved bullish. Yeah, pretty obvious here. Where did we move bullish to, right? right back into a previous level of structure, and then we saw some indecision here as we bump down to a lower time frame, an hourly, and get some more information. What's interesting here is this, right? Last time we shot up with a weird funky move. We put in this little pattern of like weird inside bars and candles that weren't really strong and all types of indecision, and then we collapsed to the downside. So far, we're doing the same thing here. We rallied up, and now we've gotten 1, 2, 3, 4 doji candles, indecision candles, right? Don't be surprised if we get another collapse to the downside, and if we do, 232, look, that's a nice little rhyme there, is the level in which I would expect that to occur at, right? What I did there is I looked for our most recent level of structure, most relevant recent level of structure to me, which is going to be right here. You can see that's about 231.91. I saw an even handle number, psychological number. So if you're going to be at 231.91, your miles will be at 232. I didn't measure this in, but it looks like a 50% Fibonacci retracement. Ooh, I think I'm going to be a little bit off. No, I'm going to trust myself. Trust your feelings, Akil. 50%, 50%, 50%. Oh, I'm so good. Look at that. I know for you, technically, Akil, it's at 232.03. Whatever. I'm good, right? Yeah, it's not a black or white situation. It's close enough, right? Akil said, Akil, you say there's no close enough rules in trading. You got me there. So yeah, anyway, I'm going to count it as a win because it was close enough. So take that. Good level to shoot for targets at, in my opinion. So there are a lot more opportunities in the market, but they're very similar to the ones I just went over, and my eyes are slowly closing. So I'm going to wrap this video up. Like if you liked the video, leave a comment if you have any questions or ideas and topics you want me to discuss, and also make sure you subscribe. I got a lot of cool content on this channel, thousands and thousands of videos that you don't want to miss, so make sure you put yourself in a position not to miss it. Until next time, plan your trade your plan, enjoy your weekend.